Hello guys, welcome to Traders Therapy Session. Like always, I'm your host KRO. I just thought why not making a tape reading, a live commentary video. So as you were following me, if you were following my work, you would know that I don't like to trade with sounds because I wanna focus on relevant things. You find me on a market comment. I find myself on a market commenting like on each and everything that I see happening. So, and for that, I think if I do that live while commenting, I think I will lose you. So today, let me try to focus. It's a development, guys. It's a development. We are looking at ICT Silver bullet session. We are looking at ICT Silver bullet session. Let me put it right here. It's an AM session which take place from 10 to 11 AM. This is where you want to find your entry. Let's just say entry time. Guys, I will comment on my analysis as time goes. I will comment on my analysis as time goes. Okay. Now that is 4 minutes past 10, this is where we're looking for entries. So let me outline what is it that I had. Let me just try to outline what I had here. Let's start from the hourly time frame. This needs to go to, it is important, guys, to know how to control your analysis, not to clutter your charts. And it is very, very important to even not use more annotations, a lot of annotations. Let me put it like that. So what is it that I'm looking at, you may ask? Let's just go from the daily top-down analysis. Oh, sorry for that. Let's go for the daily. So on a daily time frame, when was this? This was this day. It was this day. On Tuesday. On Tuesday, I was looking at the close to have a maybe swing high. As you can see, this we have a low here, we have a high, and we have a low. So I was looking at this at the close below this candle right here for me to have a swing high here. Then and only then, for me, it was the sign that the market might want to go down, maybe feel this imbalance halfway or try to retest whatsoever that I have outlined there. Whatever that I have outlined, mean to say. Excuse me, guys, on my language. So what is happening here? We have this week that closed yesterday. I hope I'm not left by the trade. If is that buy, guys, I am willing to let it go only if it doesn't give me a fair value gap. So looking at this candle right here, this candle's weak. This is the kind of a candles that you want to watch out for as you trade, if you are trading ICT. So this week we treat it as a consequent encouragement. So you can see now let me just outline this. Then we call this a daily consequent encouragement. We'll call that one a daily consequent encouragement. Then from here we'll go just to, okay, let's go to 4 hour. Because there was something right there. Let's just go to 4 hour. What is it that we had on 4 hour time frame right here? Okay, we have this pullback, with which it was 50%, plus the consolidation again. Here we go. We had this 50% test right here with a fair value gap from this low to this high. You have the candle that is higher than this candle, that closed higher than this candle, and then the one that closed above this candle again. So we have a swing high here, swing low, I mean to say. Then we have a swing high right here. This is what we're having. So at 50%, while I was watching the price, this is what I saw. Price was consolidating here, so I was looking at the price to leave this consolidation. But we had this 1 hour fair value gap right the hour before our time of trade, and we know the rules. If we have something like this, on an hourly time frame, it's like most likely to be respected to take this lows. So I was looking at that, looking at the lower time frame. Going to the lower time frame, you will see how I outline and highlight my buys. Is the reason why I said the price might, is the reason why I said, I don't know whether I said it in my mind or what. This buy, I'm willing to sacrifice it if it doesn't give me the fair value gap. But we might have a second stage distribution right here, just to go down. So I will be looking at that. Let's go into 15 minutes time frame. So what is it that we have? We have this resistance level, of which it's our fair value gap, hourly fair value gap, the strongest level, which is this. And we have a buy side. Now we have this sell side liquidity and this sell side, plus the one that is resting here. So we wanna know now. We wanna see if the price will come in and come back to go up. This we'll outline this as our original consolidation, maybe to go high. But for that, I haven't taken any bias because I'm trading a silver bullet. Let me just go to this is an hourly. Let me go into a 15-minute time frame. Let's go to 15 minutes time frame. You can see I have a 15 minutes time frame. Fair value gap right here. Let me put it there. So price came into this fair value gap, and it's 15 minutes fair value gap plus an hourly fair value gap. So for me, this is a battle. So price can respect this, and then where is your minimum TP level? Your minimum TP level is the high. It can take this and just wick above, and after wicking above here, then drop, or we can utilize this and go against the hourly fair value gap, because the market hasn't yet outlined even to us whether the price is willing to go down, but we are still pulling up. That's what I can say. So, and usually on a silver bullet, you have at least 2 to 3 chances and opposite chances. If you watched my previous video, which is yesterday's video, you can see it's titled "I made $200+ under 5 minutes." You check that video. I was trading against the trend. I can say that I was counter trend trading. So with that, you can see how this can yield you much more. So we have another 15 minutes fair value gap right here, of which is interesting. You see, I like to see what price came into that 15 minutes. Then I'll just go to 5 minutes time frame right here. I'm having this high and this higher high and the low right here. This candle, it's a breaker right there. But I'm also willing to sacrifice this trade, guys, because I like to trade where there is a fair value gap. When there's no fair value gap, to me, is like a low probability trade. So, but we tested that breaker. This is a breaker low. This is a breaker low. As you can see, we tested that breaker, and you know what kind of a breaker I like to trade. I know this has an invasion fair value gap, but I'm willing to let this one go, guys. Like, I'm willing to let this one go. I am really willing to let this one go. But this outlet, this right here, guys, this right here, guys, certifies our setup. But I'm willing to let this one go though, and soon I will explain why. Oh, break high. This is the breaker high for me. This candle created the high, single candle, bearish candle, and we have the higher high, and plus market structure shift right there. Then we have the entry right there. It might be an OTE, then you utilize the other block entry. But I want and I like to see a fair value gap before I enter my trades, guys. Like, for me, that's an A plus setup. OTE entry again. But I'm willing to let this one go, guys. I am really willing to let this one go. On my 5 minutes time frame, let me remove this one, because this has already started, guys. The silver bullet has already started. So with me, the kind of a setup that I like to take, I would have taken this sell if I have a fair value gap, and instead not even an invasion fair value gap, but this can still perform. This can still perform. Why? Under the 15 minutes fair value gap, we have respected the 5 minutes fair value gap as they overlap right there. This is your closest hanging fruit. Plus, I will show you something. During the type of a news that we had, unemployment claims, this is unemployment claims for sale for December contracts. This is why it is important. This is the reason why it is important for you to make sure that you save, you journal your trades, so I can come back and refer. So it is likely to play like this. Let's go back and see what we have. That invasion fair value gap we mentioned. So basically, this is not the high probability day for you to trade. For me, not you. This is not the high probability for me to trade, because imagine if let's see the long. I would go long here. My stop loss will be right below the 50% of this candle right there. I would want to accommodate that plus my first TP. In fact, my own TP would be like this. This is the kind of day where you don't see your TP hits. But this was the trade right there, right at 10 a.m. Exactly at 10 a.m. I can let this one slide, unless if we get the continuation, but I favor the 1 hour fair value gap than 15 minutes fair value gap. Plus, now let's come to the reasons, guys. I hope each and everyone now has buckled up. Now let's come into the reasons. Why am I favoring what I favor? What I'm favoring, I mean to say. We had a market open right here. Plus, we have a Asian range, as you can see. I will use the core content information for this one. If you are selling, you want to sell above the Asian range high. So if this is the Asian range, then we have the high, right? We have the market open, then we have the London low. And why is this a London low? Because your London kill zone will start at 2 a.m. right here. Then it opened, it went high. Why is this not a high? Because there is a high right here. Then we have created the low ever since we opened. Then we went to create this high. Then when does it end? At 5 a.m. right here. 5 a.m. right there. That's where it ends. Then you have the London be taken out right there. You have a 7 a.m. to 9 a.m. silver bullet. So we took the London high. We haven't taken the London low. We are above the Asian range. We have the 1 hour fair value gap. We have a 15 minutes fair value gap. What makes sense to you? To me, plus we have the, look at here. Just have a look at here. We have a sell side liquidity. That is looking appetizing for me. So I want to get my trade somewhere around here and take it, at least try to ride it. And I don't have to get to this level for me to be profitable, guys. I don't have to get to this level. Plus the top step combined challenge will lock me. I will be risking the chances of passing this challenge, because I will be wanting to get more than what I'm asking for, because I should not go above 1.5, and I'm trying to go as much as I can. Let's go to 1 minute, because this to me, maybe the 50% consequent encouragement of this one right there. So we have the 1 minute fair value gap right there, of which it worked. 1 minute fair value gap of which it worked. The minimum TP was hit right there. Then it went even lower. Then we are reclaiming. We are coming back into that fair value gap. This becomes what? This becomes a second hand fair value gap for me. And what do you know about the second hand fair value gap? If you have been following the bus driver model right there, a free course, guys, that guides you to see price the way that I see. If you have been following that on my YouTube channel, this one, right, the one that you are watching, you would know what I'm talking about when I say a second hand fair value gap, how I treat them. I expect this to happen. It can even go back, but it can do this as well. So I'm looking for a signature right now. You see this fair value gap, this 1 minute fair value gap. See this candle's low, this candle high. If we drag price into it, then we closed above this. But we can still treat this as a mohawk. I am not even going to go for any sells or any buys for that metal, unless if the market outlines to me with this being violated, then I might be going for highs. Which highs? -1 standard deviation there. But to tell you the truth, I wouldn't call this a good day for me to trade. This is like a missed trade, guys. The 15 minutes fair value gap, it dropped. Plus, it was the 5 minute fair value gap. Right there, the 15 minutes fair value gap. Plus, it was the 5 minutes fair value gap right there. Minimum TP, the closest hanging fruit. If you see me calling out this is the closest hanging fruit. Guys, you saw me, you were watching this with me, you saw me, you saw the trade, you saw me, you saw this live, me having to miss the entry. And it will happen also to you. Every day will never be your day. This is our closest hanging fruit. This is our closest hanging fruit. You can see we had a draw on liquidity right there. So we're going to check out this gap. This is the close and this is the open. I just want to verify my facts, guys. Then we went for 50% right there. Then this is the missed trade. This is officially a missed trade. It's just the unemployment claims, the buy side of it. On December we had the sell side, but now this is the buy side of it. So now I'm looking at this. Are we going to fully close this and go for the low? This is Wednesday. Previous day's low. We have a previous day high right here. You can see how the market is reacting. And this is what ICT is talking about. Like, this information is right there. It's just right there. You see, we offered only there. And we talked about the gaps, the properties of the gaps. We have the consequent encouragement 25%, 50%, 75%, and 100%, of which is a full close. So right here after the open, we had the 25%, then we went high. And we came back. You can see the 50% right there. Then we came back into the 15%, 50%, then we went high. Then we open right here with this gap on a daily time frame. Let us just do that, guys. We open right there. You see? Then we went for 50%, then we went high and took out the open high. You see? We took out the open. And I told you that this can even give you two chances even to enter either same direction or different directions, as long as you can identify your closest hanging fruits or the directional buys for that matter. So I'm watching how we are dealing with this hourly fair value gap right here. If we get a market structure shift spooling down, I will enter my sell right there. Just aiming for the close of this, at least. Maybe from this to that, because the market hasn't traded into this area right there. Or we might just be going for the previous day high. Because this is all we are doing. We are just looking at the liquidity. Which side of liquidity is appetizing? I would love to get the sells, but if the market is still offering the buys, I can never, ever, ever disagree with that. I just have to follow what the price is doing. But the kind of a scenario that I'm looking at the price to go high, like this one right there, and to spool even lower. And guys, I'm using the trading view free version. If you see me keep on, what is this? If you see me keep on skipping the ads right there, is because it's a trading view free version, and I'm showing this. I just saw it closing, by the way, and I did not pay it because I like to such things. Subscriptions, I have separate accounts of which I just put the money there for the subscription, but this time I did not. Then I saw it closing me, and then I just decided not to pay for it and to show. This is not the day that I wanted to show you. I wanted to show you that you can use Trading View for free, guys. Like, you can literally use this for free, and then you can get what I'm having. Your charts can be like this, as clean as this. It just depends on you. So I'm watching what the price is doing right there. We open, we went for the low. We have the order block right here. Is the reason why we tested. Let's go back to electronic trading hours. No ways. I like to highlight this. The market came into this order block right there. I really like to highlight this, because this is the reason why this market left me to go for that. But anyways, it is what it is. We just following the price, and we don't make sure that you don't get carried away while you're trading. Always keep calm. This is what I'm trying to do right there. I'm watching how price is reacting towards this hourly fair value gap. If we invade it, it means that we might come back for it, then go for this highs right there as a closest hanging fruit. I'm just watching what the price is doing. That's what I'm doing. And it will be better if I risk half of this, because I just stipulated my daily risk. It will be better if I risk half of this in this kind of a situation. Now I can go back. Now that I have this, let me shade it blue so that I can see it. Or this color is fine. Then let's go to electronic trading hours, guys. This was a buy side. We went above. This is an order block. Then we went above this. We came back and we did not close below 50%. Guys, pay attention, please. If you need to understand this, I would want you to pay attention on this one right there. I might not say it again in a very long time. Plus, we are just trying to outline what the algorithm did there. We did not see that, but please make sure that each and every analysis that you are taking, never ever don't save the losing analysis. Please turn those things, just see what the algorithm did and save the winning algorithms, because the losing algorithms are not going to help you with anything. They're just going to bring the memories of you losing the accounts or losing whatever is it that you are losing. So all you have to do is just please save the good things, good stuff. Let me get rid of this one right here. So guys, this is it. I might not say this in a very long time. This is an order block that was disrespected, but it worked right here to spool down. Coming back as a second hand, it was disrespected. Then price came back to retest this level at the 50%, and the price did not close below the 50%. Then this becomes your propulsion block. I don't think, guys, I'm going to say this again anytime soon, because I don't usually look for other blocks. I mainly look for, let's remove these things. I mainly look for the fair value gaps, just taking the fair value gaps, just one setup right there, and move on with it. So you see this liquidity sweep right there, right before the market open, you see. So we might go for the daily low. This is our daily low. We went for the daily high. Now we might come back for the daily low. I want to be focused right here, guys. Right in front of you. The only disadvantage I think that comes with unpaid trading view is what is this? Is the ads plus a replay button, but you don't need a replay button, guys. Like a replay button will just prolong your development. I don't want to lie. So here I will want to take a title soup right there before this breaker happens. So I will go for 1 minute. Then I wait for the retest of this right here, guys. Any relevant area that I can get my entry, I will take this. I will treat this as my title soup and try to go for the low, because to tell the truth, I would favor the hourly fair value gap more than the 15 minutes fair value gap, because the hourly is more stronger than the 15 minutes. Let's go back to the hourly and see that fair value gap right there. What did I do to the hourly fair value gap? This fair value gap that we have right here. Okay, I might have erased it. I favor this fair value gap more than the 15 minutes fair value gap. Right there. So we closed above this fair value gap. If you were watching my teachings from back then, you would see that if we disrespect, if you were watching ICT, let's put it like that, because all this information comes from him. You see this fair value gap being disrespected because we have two fair value gaps. So even if you entered based off of this fair value gap, you would want to accommodate this one, but you wouldn't have entered based off this because it closed, it disrespected. You see this candle, it's a signature to you. It signs to you, it's telling you that the price might disrespect this area. So you want to reduce risk. Allow the price to come to this area. Then as it moves lower, you might be targeting for this. And if you lose your trade, it means that the price will even go higher than that. So we're watching, guys. Like I mentioned before, this for me, it's a low probability day. Like I've said it before, but I might be willing to participate on this one right there, because I'm still having my closest hanging fruit. This could be a nice market structure shift. 1 minute as we were explaining. Let's see if we didn't miss any entry right there. I might be wanting to see the disrespect of this 5 and 15 minutes candles, and then we leave something, maybe this low, we react off of this week right there, then we go after the fair value gap. Then with this, I would have, if this happened, with this I would have my high right here. I would have my high right here. Then I would have my higher high right there. What does that mean? If I have the high and I have the higher high, then I'm looking only for the fair value gap. Then this right here, I do not expect the market to come back for this right there, because we have a fair value gap, we have invasion fair value gap. This is balanced. So why am I saying that? I'm not just saying that and this happens only if we have the sell, the breaker, because nothing has unfolded yet. I'm just reading price forward. If this happens, this is what I would like to see. I would like this area from these candles to these candles low, shaded low, to have the fair value gap right there. I want to see the fair value gap with this candle that overlaps with this right here, with this breaker block right there. Plus, we have a 15 minutes, would have a 15 minutes plus 5 minutes invasion fair value gaps. So it's a sign for us that it's telling us that the price is not willing to go up, so we would enter when as we test. So this will be a high zone of confluency. Then you would want to check if the price, what the price does as it gets to this, the consequent encouragement of that week right there. But we have a nice sell side liquidity there. As you can see, we have a very beautiful sell side liquidity right there. Right there. Where else do we have a sell side liquidity? Plus, we might be coming back to this area right here, or this low. I'm not sure about coming back down there, but in this zone, you would be looking for your, what is this? You would be looking for your entries right here. Maybe to go sell only if everything else outlines. But like I said, you want to be very careful during this day, because we had a consolidation right there. This could be the return to original consolidation. And this is the hardest part of market maker model, guys. Like, this is the hardest part of market maker model. If you see something like this, please, just if you did not get the first entry as the price is returning to original consolidation, as you can see, just don't take anything. Wait for that easiest part. Let the buy side go, because this would be some of us, we miss this and see it as it occurs right here. This could be this or being original consolidation. Price would go even highs, pull to the highs that we are looking at, of which is this area right here, the -1 standard deviation right there. And as it can move down, so it will be creating the engineering the sell side liquidity. Then you wanna have the sell side of the curve as a spool. This is a compression. Then you want to participate on the expansion. Then I have this fair value gap on a 5 minutes time frame. So I'm willing to risk this trade, guys. I'm willing to risk this one right here because it's still under the time. As you can see, the sell right there. I am willing to risk this one sell. And go for the closest hanging fruit. I should have entered on the second candle, guys. Like for this one, I shouldn't have rushed. I should have entered on the second candle. As seeing price coming in here, then this is how I will manage. Then the highs, let me just protect. Let me just protect the funds right there. Right above the consequent encouragement. If price will go above this, it's a good chance that the price will fail here. It's a good chance that the price will fail right there. Let's be going for the short. We entered right there. Our stop loss right here. Then our TP closest hanging fruit being 1:1. Or the consequent encouragement right there. But remember, we are still looking for this area right there. This could be our closest hanging fruit. Not even to stretch it higher. This could be our closest hanging fruit right there. Let me put my buy limit right there. So now we are looking at managing the trade. How do we lose less than this? So we have the little bit of a that is going to make it difficult for us to manage right there. We have a little bit of a fair value gap right there, you see. So we'll let the whole risk run. But we have this fair value gap right there. This is the point where the traders want to manage their emotions. And if I take a loss, guys, on this trade, this will maybe be the only one trade in the longest time that I will post that will be a loss. Not that I don't want to share the loss, but I don't want to share negativity with you. That will be the reason. If you say, I do take losses, guys, like I do take losses on a daily basis, but I share wins with you because I do not want to share the negative part of trading with you. I'm just showing you the positive, but the losses are there. If this becomes a loss, I'm willing to share it with you guys. So I wanna cut my loss short as it gets somewhere here. If it doesn't respect this right there. So this is 21 seconds left. If it closes above this, I'm taking 3 contracts out. If the price closes above this, then I will let this one run. Then as it comes and give me another opportunity, then I will. This is what I was expecting, guys. Then I would want to maybe bring 2 or 1 back right there, or just let this one run. That will be it. So this is the most difficult part, guys, managing the trade as it runs. Plusing the value. Guys, it's a demo money. It's not a real money, guys. This is a challenge. It's a challenge combined account. I am not winning anything here, but the challenge. So you are not advised to trade with your money. And whenever I trade, I'm not going to tell you, most of the time I would be using the practice account that is given by the top step right there, just for me to, let me not say to protect myself because I will be copying ICT. Let me say it for me to share the value with you guys. The skill. I'm not sharing money with you, or I'm not going to make you any rich, guys. I'm just for me to share the skill with you. This is the skill. Remember, you are using a paper trading, and you are not even following along. Even when I'm going to get live, guys, like, please, we are using just the paper trading, and learn to do this by yourself, so that whenever you think of going live, and that will be your choice by then, you would be able to know that you can do this by yourself. But trust me, guys, going live is not as the same as doing what I am showing you right here, guys. It's hell. Going live is not easy, guys. It doesn't get any easy. So we respected this. We still leave our stop loss where it is. There's no reason to close anything lower than anywhere. I said only if I can have the close above. That's the only time I would. What is this? That's the only time I would think of closing. So I might not even get a chance to even close. It might run to close the stop loss, but I'm just utilizing. I'm still within the trading time and within the rules. This went, we didn't take the highs. that could be challenging. We didn't take the highs, but we are under the 15 minutes time frame fair value gap. Oh, the 5 minutes fair value gap, it was disrespected right here. This might be the reason for me to close the trade. Close half of the trade. I didn't see. We violated the 5 minutes, as you can see. Right. If we violated the 5 minutes, this might be the reason for me to do what? This might be the reason for me to start to manage. Plus, we have the 15 minutes time frame, 15 minutes fair value gap right there. Let's go to 1 minute. I mean to say, let's go to 1 minute. Most cases, guys, this will be a mohawk. I've learned it, guys, with experience. The mohawk of candle closes above the wicks of your fair value gap, and the price continues to go to your area. But this, for me, I wouldn't regret going for, guys. I wouldn't regret going for this lows. I wouldn't regret going for this lows. Consequent encouragement. I wouldn't regret, guys, going for this low. Trying to go for those lows, even after a failure. I wouldn't regret going after those lows. It's worth it. Because first thing first, you need to know where liquidity is before you can even try to do something else. I do not like the way that the price is doing right here. The way the price is consolidating. I don't like it at all. Closest hanging fruit. Pay yourself. Second one. If you can let this one go, at least pay yourself right here. Then this should be the final TP before going for the final, as we can call it. You might see me going maybe after 1:2, something like that. Because I don't have to take everything, guys. Like, I don't have to take everything. The aim here is to secure the bag. As long as I know the move, as long as I can anticipate where the move is going, part of that move, I need to save it. Like, part of that move, I don't want to lie, guys, you need to save it. So closest hanging fruit right here. I'd be looking at the closest hanging fruit right there. It would be nice if we create this fair value gap. This is what I'm watching. Rather than creating an immediate rebalance. It would be very, 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 very beautiful to be creating this fair value gap right here. I'm watching at that. Yes. Then if I entered with a, now I'm starting to manage from here. Disrespect of this, it will cause me to go out. I might even go out with more than 3-4 maybe, and leave one running. Reason because of we have the 15 minutes fair value gap and the 5 minute fair value gap being disrespected here, but we still have a 15 minutes fair value gap that we are working on. You can see right here, of which the 15 minutes fair value gap, where is the 15 minutes fair value gap? We have this 15 minutes fair value gap right here. Oh, I didn't see it as 15 minutes fair value gap. Oh, this one. We have this 15 minutes fair value gap that we're respecting, but we just took out the closest hanging fruit of that right there. If you can see that, we just took out the closest hanging fruit. That might be the first chance, and then you might get the second trade opposing that move. then maybe going for the low. This would be a nice trade to go for. I don't know, but this would be a nice trade to risk for, because we have the sell side liquidity right there. If you can see, we have the sell side liquidity just right there. Then let's go to 5 minutes time frame. Now, coming to managing trades, it would be nice. Let me change the colors with the ones that I want to see them resisting price. It would be nice if we close below this. It would be very, very, very nice if we close below this fair value gap right here, the one that you are seeing right here. This will be the sign for me that the price is really willing to go low. Closest hanging fruit, ultimate TP. This is my ultimate trade for the day. Even if I'm going for this, it's fine for me. I rather watch the price, but ultimate TP will go right. Consequent encouragement right before consequent encouragement like this. I rather watch the price perform to the area where I've outlined it to go to. I would love to see price disrespecting this area right there. Seems like we have a slow, low pace. Let's see from the 1 minute. Sorry for that. What is it that we have from 1 minute? We have the respect and we have another fair value gap right here. So since I'm having this, I do not expect the price to come above this area right here. If we come back, let me see how much I'm risking. If we come back to that area, I'm risking like $13 times 5, 50 plus 15, $65. It's worth it. Let it go. It will be nice if price closes below this area right here, the one that you see right there. It would be very nice. In fact, I should have paid myself right there with 2 lots. Because if price comes back up, I want to play a, what is it? If price comes back up, I want to see myself playing a risk-free trade. If I lock up, if I locked up the 2 lot at this area as opposing move, I could have done what? If I locked up this, I could have, what is this? I could have at least secured the risk that is on the table. The risk that is on the table as the market was testing that. Because I could have closed close to $180 as I was risking $60. So now if I close this one, I take nothing. So I'll keep on managing the price right there. But is the trade worth taking, guys? Plus, the closest hanging fruit was never taken, but we have a consequent encouragement of which it's a sensitive area. This kind of a weeks, guys, these are the kind of a weeks that you want to pay attention on. Reaction off of 25%. You can have this and hit the stop loss just like that. And you can't do anything about it. You just can't do anything about it. I'm watching how price is reacting off of this. This can just be a spool. A chance for a trader to go out. As you can see, this is not a good day, guys. Right there. What if I left it? The stop loss could have hit right there. This has gone lower. S&P 500. We have the lows right here. We missed the chance with the trade right there. If you can look at that, we entered right there and we exited right there, close to break even, guys. That does it worth the trade? Yes, it does. Let's see the 50% is now. We can come in. And the stop loss becomes here. See, above this candle we have a stop loss. I will explain soon what I mean by this, guys. So limit, let me put it there if it allows. Oh, buy stop. I need to put a buy stop. And I'll just go to for the closest hanging fruit. Buy stop above there. Then sell limit right there. Sell stop right there. It will be rejected. Sell limit. I have to put a sell limit. Trade sell limit. Buy limit, I mean to say. Yes. The reason why I re-entered, guys, is because I saw this trade playing out with an order block and the consequent encouragement right here. If you can look at this candle right here, you see, I didn't want to miss this one right there. This is the reason why I entered, if you ask me. And this one is not here, but it's here. The entry is here. So it's 1:3. But as long as we can get 1:2 out of this, would just be fine. Let's go to 1 minute time frame. We respected this is the kind of wicks that are the kind of a candle close that I was talking about. But seeing the price still spooling even further down. If we can get the closest hanging fruit of this right here, I think we would be fine with it. I think we'd be fine with it. Sorry for that. When you see yourself managing a trade and people coming in, so you sometimes think that that's a spiritual attack. We get a second chance to enter to take something out. Let's see how the market reacts with this fair value gap right here. Let me just take this out right there. After the test of that fair value gap, I want to see the reaction of the candle right there. I'm anticipating this to be disrespected, guys. This is the reason why you see me holding. But if I see price giving me such things, such vibes, I just let it go. I'll just have to let the price go and take whatsoever the market has already provided for me and leave. Leave you in peace with your market, guys. The second time, I don't wanna see price doing this, guys. Like I don't feel good whenever I'm in this kind of a market, kind of a consolidation day. %. Let me just go out and watch the price, guys. Let's just go out and watch the price. This is not a good day for us to be hoping for something to. Oh, the entry for sell was here, and then we just exceeded here. Let's just go out. Okay. This is 1:1 risk to reward. Oh, let me just wait and see. Plus the entry was right at the last minute, 11th hour to go. But the price can pull down. To tell the truth, guys, I do not want to see price doing what it's doing, because it can just consolidate or even moving high. I have the battle of 1 hour fair value gap plus a lot of fair value gaps right here. This is the reason why you see the market rejecting. Sorry, I was just expecting the market as it comes here to just pull down, and then as it moves down to retest this, because I trusted the hourly fair value gap than the 5 and 15 minutes fair value gaps right there. So guys, that's it for me. That's what it costs to trade ICT Silver bullets. But you need to outline your days. You need to know which days are you trading, what kind of a market do you want to see, what kind of a trades do you want to see as well. No emotions, no hard feelings. So let's see if the price will come into the area that we outlined without having to hit the stop loss. So if we hold it that, where did you enter first time? Okay, it's somewhere here, almost the same area. Even if with the first one, almost the same area. We entered at the same area because we utilized this fair value gap as the market price, as the this price went there. And I was thinking to myself the time that I was entering this, that I messed up for the day. If I have to answer on the journal there from Top Step, what did I learn today? I learned that I must have a patience, because my strategy, this, I should not enter with the first candle. I should have entered with the second candle. And right after the first candle closed, but I wouldn't have entered after seeing this. I would have just lost an interest, because this is a low probability, as you can see. This and that. And if you've been following me, you know I talk about these things, guys. So you don't even reach your closest hanging fruit, but you did great. This is the only, is it the only fair value gap, I mean to say, that occurred during this time? No, it's not. This is the second fair value gap. And like I mentioned before, you can get at least 2 or 3 entries during a silver bullet. This is why I love AM session, because this is just a one shot. Others are just one shot to the move. But with an AM session, you can get the bounce, bounce, bounce. You see, even if you are against the buyers, but you will get the closest hanging fruit. You are likely to get the closest hanging fruit right there. So this is the kind of a trade that I don't like to be in. And what if this market, this price goes to the lower area? I did good to move out, because this is the type of trades that I do not love to be or participate in. So I just did great to go out of the market around that time. So guys, without wasting any time, guys, I hope you love this video, like this video, I mean to say, and then you share it in order to bring more people in, so that I can be held responsible. And I like to thank you guys. I like to thank all my new subscribers recently, guys, and the old ones who've been watching these videos. Guys, you mean a lot to me. But I hope you're not just watching, you are learning. And please comment on the comment section. Let me share. What is it? Let me share with you what I know, what I have. So do not be afraid. Comment there. And this is your chance, because we are at the low rate at the moment. So you can just comment there. If you have questions, then I will answer you. I'm just sharing this for free, guys. Yep, this is ICT Silver Bullet. We just took this 2 shots, one of break even less than $60, then the other one we took 100 and something dollar. So we just did not have a trading day. We just fought from the market from there, and then whatever that we were given, we just took it out. Then we let everything go. We don't want to be held emotional right here. Even if it can go in our direction, it is still fine. The reason why we did not like the way it played out. It will play out great most of the time, you will see. But this will be the kind of a days, and some days you will get lost, because you would have never saw it coming. Like today, guys, I missed this buy right here. I missed this buy right here. You can tell I missed this buy right here. Consequent encouragement just right below the consequent encouragement, with the closest hanging fruit right there. 1:2 hit, clean entry. So this is the kind of an entry of an algorithm that I will take. This is the kind of an entry that I will save as my journal, and this is how I will save it. Let me remove this. Yeah, this is how I will save it, and this is what I will do. Sorry for that, guys. I would save this buy. This was the stop loss below the consequent encouragement, and the entry exactly at the time, 10 a.m. This is what I like. I like to get the first run, guys, before 10 a.m. And how many ticks run? 270. This is the average that we know we have. So 270 ticks AM session. This is the kind of a trade. 1:2.5. This is what I will save in the journal, guys. Like, I will save this picture and I will save this trade. You saw me taking the trades here. These are not part of the good trades. Like I said, this is the algorithm, because next time you want to see this type of an entry. And we're going to remove this and remove that, because we were anticipating for this to happen. Plus the New York session, you can see the NYSE open. I mean to say, it's a Judas swing. Then the price will move even higher. That Judas swing, then the price move higher as we go after this. Then we took the liquidity. Then whatsoever that happens from here, you can see the price moving even further high. So your stop loss could have been hit right now. The market gave you what it gave you. At first, the market gave us around $200 and something like that. Then we couldn't really take it, but we took something and we're grateful of that. So see you on the next video, guys.